It moves all over the place. And again, all I do is study the price. In the last couple of days, we've had what has really been bad information, or what should be bad information for the stock market. We had a 9% print, 9.1% print on the CPI. We haven't seen that since what, 1981? So I remember those days, but I'm sure a lot of you have never seen inflation like this. So that was really bad information. It just means that the Federal Reserve in the United States has to raise rates, has to tighten monetary condition, and that is bad for stocks. Then we heard a rumor yesterday that instead of going 75 basis points on the next rate hike, that the Fed was likely to do 100 points. And both days we went to the lows and bounced. Today we went to lows and bounced. So, you know, the market is digesting this very bad information. And that's what it does. The market is a forward-looking mechanism. The market is a discounting mechanism. And the market is ahead of the news. So again, day to day, we really, you know, this is a market that is, you know, up one day and down the next. It's really been, you know, a bouncing ball, like a ping pong ball for the last 2 months. So I do think directionally, the big picture is we're going much lower. But, you know, we're just in this little area here where, you know, I see that, you know, we could probably vacillate. And, you know, prices move in a certain way. I've been trading these markets long enough to understand that despite how bad things are, you know, sometimes when you get to certain support areas, when the market hits here and here like it did this morning, you know, you know, I know better to chase these lows, that there's a trap down here. So I talk about, you know, kind of identifying the opportunities, but also understanding the traps. And there's another trap right in here. So, you know, I expect as this market goes to new lows, you know, this thing will be here, and I wouldn't be surprised to see a pop out of here. So prices behave in a certain way, independent of the news, independent of whatever we think conventionally. And this is why most people are losing, because they're overlaying a prism of conventional thinking on a market that is a forward-looking thing. I would say the market is a discounting mechanism, meaning that it's digesting all of the news, and it's all about, you know, what's going to happen a month from now, 3 months from now, 6 months from now. So people think, well, we just saw a 9% print. That's horrible. Well, that's a print about what happened, you know, in the last quarter. The market is now looking, well, is it possible that maybe the print will be lower in the next quarter? In which case the market may start going higher before we even see the good news. Now, I do think that, you know, any higher move is going to be a trap, that the market is going to go make a new low, that we have made a low, but not the low. I mean, we could go up here and still go down there. So, you know, the market now, we've been spoiled in the last years where the markets have been pretty directional, meaning that, you know, the markets have been pretty trending one way or another. And I'm talking really about the stock market now. So this is the NASDAQ, where we had a directional market for a long time. And, you know, everybody looks like a genius in a directional market. So there's this woman, Kathy Woods, who runs this ETF called the ARK Fund. And this was an aggressive ETF that, you know, was poised to make money in markets like this. But now when the environment changed, you know, the ARK ETF's down 85%. Now, you know, I've accused this woman of being a con artist. I think she is, but that's beside the point. You know, now we're just kind of in this very kind of, you know, I said yesterday, we're just in this trading range. You got the low down here, you've got the high up here, and, you know, we could just bang between here for a while. But, you know, you got to kind of understand now, it's easy to make money here. Everything was going up. Now it's become a market of stocks, not a stock market. Some stocks are going to go up and some are going to go down. And I just try and identify which ones of those based purely on their price action. So, while I have this open, you've heard me say that I'm extremely bearish based on what I see as prevailing bear patterns. So when you see a pattern, pattern equals trajectory. So when you saw this double top up here, it meant the market was going to go lower. Now the question is, has that pattern done its work? And will we see maybe a counter trend move? And that's, what the market's grappling with every day. Have we pulled forward enough of the carnage and the disaster, or, are we still going to go lower? And I do think that while we could come out of here, we're eventually going to go lower. I do think by the end of the year, what is this? Oh, this is the NASDAQ. Okay, I thought it was the S&P. We will be considerably lower than this. But it's quite possible that we could go higher in here, we could go lower. It's really, now it's become a bit of a random environment, so I look for areas where I can see that the market's going to turn in my direction. So you said you had a key reversal here, made a new high, close on the low. So when it got here, I just sold into it and was able to take advantage of the next down move. Now it's a little bit more random. It could go up, it could go down, and guess what? It's done all of those. So every week is the opposite of the prior week. And so this is where, people get confused. They, don't really understand what's going on. And they're very susceptible and prone to get suckered into the next rally before it turns this way. But if you understand the bigger patterns that are governing or dictating a market, then I will use, any of these up moves to get short again. And frankly, I hope it does go up. I'm kind of pretty flat now. I'm kind of just on the sidelines. I've been sharing with you my positions. Today I actually got long Tesla. So for the last couple of days, I told you I've been shorting Tesla. I was shorting it at 725. It went to 675. I got out. And today, I started getting long based on a combination of different signals that I'm looking at. And again, I'm not looking to get married to this thing. Any kind of up move, this is very much of a trading market. So typically I like to get positions on and then watch that market go directionally. But this is not a directional market. It's just a very fluctuating, vacillating market. So I've got 1,250 shares. I bought them when it crossed back at 700. So it went down. I saw it wasn't holding there. I bought them around 700 and it closed about 715. I've got about 900 grand invested in this position. And then this is all I really have left in the FX right now. I'm short a small position in New Zealand dollar versus US. And I just closed out a whole bunch of positions recently in gold and silver. Just made a boatload short in gold and silver. And I should have held on because today they went and made new lows. But, I'll just look for another place to get in there. So right now I'm very much just in a trading mentality. I'm just looking to, carve out, opportunities where I can see them. And so, Tesla to me is in a, bearish formation, but it takes a long time for tops to be made. It takes, so, you can see all of this stuff over here took months and months and probably years. So this was what, December 21 to October. So this took like 10 months of sideways before it broke directionally. And so I could quite reasonably see quite a prolonged period of this kind of stuff on here to create a symmetry, creating this bright shoulder before we go down again. So I'm a trader. I'm looking to hop aboard whichever, direction there is going to be a move. And so you can see this is the weekly, we kind of clustering, we're kind of grabbing hold at this support area. We haven't been able to go down. We haven't been able to go up. And so I'm just kind of surmising that maybe this thing will go up right now. You can see that buried in all of this, you can see this key reversal here where it made a new low and closed on the high, and then it made a new low and closed at the high. But you also have, signals here where it made a new high and closed on the low. So we are just, dead in a trading zone. And based on just the evidence of the last 2 days, I took a shot at buying it. And I'm going to, my risk is very small in my mind. So This is what I call a counter trend move, where I believe this is put in the top. I believe this thing is going to go lower, but it could go higher before it does that, you know. So we'll see what happens here. We've got Tesla is going to announce earnings later this month, July 20th. And these, you know, earnings things are always a catalyst for a move one way or another. So, you know, we're just in this very, very tricky area where we've grabbed, you know, a bit of support here. And now it's just very tricky. And now I'm just, you know, trading this very short term. I'm just trying to carve out very small moves while this thing. So, like I said, I look at a combination of both price patterns, price direction, and price action. And what I mean by price action is that I look at patterns and then I look at the price within the patterns. Meaning I look at, and so this is, a lot of people say, well, why, you know, most people today trade with candlesticks. I guess I'm a fossil, I'm a dinosaur, and I still trade based on bar charts, because to me, it's very important how a market closes relative to its high and low. It tells me a lot. Now, I don't just use these closes in a vacuum. I look at it how a market closes relative to you know, patterns, trends, support resistance areas, and things of that nature. So you can see that right here, I was looking at what was reasonably what I call a double top price pattern, where you reach a high, you back off, you retest that high, and now you've got this M top. And you had a bunch of these, you know, in this area too, this double top and head and shoulders. So every time it got here, so it led me to believe that when prices, you know, are threatening these levels, that they're going to fail again. Now, I look for confirmation of that by seeing how price responds. So you can see that right at the days that Tesla made an all-time new high around the 1200, it closed on the low of the day. And then when it retested this area, it made a new high and closed on the low of the day. So it was a combination of seeing prices fail in the same area, as well as this reversal price action, where market goes to a new high, and then by the end of the day, the sellers are in control. By closing on the low, it says markets try to go higher and couldn't go higher. And so now I kind of have a feeling if I get short here, I know where the risk is. They try to get it above there, couldn't get above there. So this is an area where I can take a shot at getting long. Now, this was an excellent thing where you had a combination of an inside bar. So an inside bar is simply a bar that rests within the range of the prior bar. So you can see the range of the inside bar from high to low sits within the range of the other. So now I had a combination, and what these inside bars tell me is that it's a coiling or a storing of energy, right? So it's just, this thing is just, you know, it made that reversal, and then the next day it just started banging around, building more energy to go in, you know, the direction as indicated by the pattern and the trend. And you can see it built up this energy, and then it burst out of there. And so this is what I look for on both the upside and the downside, a series of patterns and price action that kind of tells me where my risk is. Now, I may not always get it right, but I understand where my risk reward is. So now I've been, you know, I'm very bearish Tesla. You know, I was very bearish here. So when I saw this double top head and shoulders, you know, I got short, I took it for a ride, but then when you get a day like this, this starts telling you that this is an area where this downtrend is pretty much, you know, over for the short term. And you can see that, you know, it banged off this. So you can see this profound key reversal where this was an area when it got to, made a new low and closed at the high. So even though we went down to re-explore it, eventually this told you this was a troublesome area. And so we had to go back up there again. Once I saw the double top again, then I took it for a ride. And this is how markets work. I just, look at them as bus rides. I take the bus ride down, I'll take the bus ride up, down, etc. And so I just look for ways that I can get position, to carve out a piece of the middle of these moves. And that's really what I'm trying to do. So now we're in this ambiguous area where, all of the evidence tells me that Tesla has made this giant top, but tops take a while. You could, come back up here before you go back there. So I don't know if I'm right or wrong. I mean, I'm not really comfortable, doing this position, but what I'm looking at is a combination. And, again, I just look for areas of risk and reward. Where can I kind of get involved in something where I kind of understand where the risk is? And I might not be right on this one, but I understand when I get in it, what my risk is. So this is the opposite of this. So whereas here you had a key reversal lower and an inside bar, here you have a key reversal higher. So you made this low yesterday, and then you close on the high of the day. And now you have this inside coil bar today, right here. So now that's the opposite of this. So whereas I expected this to go down, based on this little combination, I expect prices to go up. And if we start breaking out above today's high, well, we close right on the high, and certainly above, I'll start actually adding to my position, expecting that maybe we're coming back to this 760 again, or maybe even higher. But the thing is, by getting in here, I understand where my risk is. So my risk to me is relatively small, and I could have, a decent pop out of here. So this may or may not work, but this is kind of how I look at trades. Right now, I'm very kind of opportunistic. The markets go up, they go down, they go up, they go down, and I'm just trying to catch these short little bus rides. So right now there's a bit of a bottom here, a bit of a triple bottom, a bit of, but what I'm looking at is all the price action in here. So when you look at these lows, made a new low, close at the high, 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 made a new low, close at the high. So there's an area in here that the market just doesn't want to let go of. It's like every time it gets here, the buyers start coming in here. So what I do is just look at and weigh the evidence of the price patterns and price action. And in this case, it's a little bit more ambiguous. The big patterns tell me this is going down long term. And the shorter term patterns tell me that, I could just hop a bus ride. So look, if I can make 30, 40 bucks tomorrow on a couple thousand shares, that's all I'm looking to do. I'm not looking to be a hero. I'm not looking to, and I'll see what this thing looks like. If this thing looks good, I'll, continue to keep it. But the point is that I use a setup where I'm just looking at price action. I'm not looking at earnings. I'm not looking at, is Musk going to buy Twitter? Is he going to get sued? Is he going to lose $1 billion? I'm just looking at this little setup here. And what this little setup is telling me, there's some support in here. I can take a peek here. I can risk to there. And if I'm wrong, I'm just going to get out and go on to the next trade. So it's just a way of looking at the markets where I look to take out sometimes bigger trades. And then, if the market's not really forthcoming, some smaller trades. One of the things that I've been looking at for a long time is Moderna. I've been looking at the first signs that this thing's going to start failing. And we started getting it today. And I actually, should have gotten in earlier. But, this is Moderna, the drug company. And again, what I'm just trying to do is share with you a way of looking at something. So Tesla, I see might have a pop higher. Moderna, I now think is going to start trending lower. So this is a market of stocks not a stock market. Some are going to go up, some are going to go down. And so I just look at things very objectively. So just like Tesla, I see very foreboding price patterns. So this to me tells me that, this thing can run, it can have rallies, it can run, but it can't hide. This thing will be a $60 stock one day. It's at 160 now. I believe that with, and so now you're in this area where you got this double top and this thing kind of supported, this is like where Tesla is right now. So every time you kind of get in this area, so, this is what I'm thinking in Tesla. You might have one of these rallies out of here. And even though it's a rally higher, it doesn't mean that it's not going to go lower. So I think this is, kind of a metaphor for what I think Tesla could do right now. This is where Tesla is. I think Tesla could do one of these kind of short covering rallies before it gets going again. So the markets, they do things in different stages, and so they hit pockets of support where they hit before, and then they bounce off these things. But this thing will return back to this support area. And when it does, it's going to go right through it. And this will be a $40 stock at some point. I bet my boots on it, and I think it's just crapped out here. And I think you can start getting short in here, put your stop above here, and this thing will get cut in half over the next couple of months. So we started, this was price action where this was like the NASDAQ a couple of weeks ago where I made a whole bunch of money. And I should have done this on Moderna yesterday too, where you make a new high, then you don't make another high, then you don't make another high, then you don't make it. It's like pushing on a string. You just can't get through this anymore. And then today we just fell through the trap door. And you can see this is right in an area where we failed before. So Zoom did this today, where they get to these areas, they fail. And so I would short any up move in Moderna, if we get one tomorrow, 165, 170, if you can get it there, I would start shorting that, because I do think that we're going to start rolling. So again, I just look at the markets based on on technical, what we call price action. So it doesn't matter what this is. I don't care if it's natural gas or corn or the euro versus the yen. I look at it. First thing I say, what is the phase or the condition of the market? Well, it's in a down phase. Are there any patterns that indicate, chart patterns that indicate, directionally which way this is going to go? And I didn't put this up, but you can see on the weekly, you had this huge double top here. So that's that pattern. Here's another double top pattern. This is kind of a wedge that failed, a flag that just, busts to the downside. And then, once I understand the direction, the chart pattern, I look for either these, what I call insurance day bars. I explained this in my book if you bought it yesterday or signed up for it. So to me, an insurance day bar is either a key reversal or a inside bar. And I wish I hadn't drawn on this, because you can see this was really a collection of inside bars. You can see the last 1, 2, 3, 4 days, the ranges were all within each other. And so if I want to hop aboard, I try and find a time where I can see these inside bars, and then I layer it with a fourth step where I put a stop order above a key reversal inside bar in a market I want to buy, or below a key reversal or an inside bar that I want to sell. So you could have just snuck your your sell stop right there at 167 or whatever the low was yesterday, and now you're trading $8 low. And notice this is on a daily chart. So I'm not watching this intraday thing. I'm not trying to watch some magic Bollinger Band or expert advisor or something, some magic crossover. I'm just looking at the patterns and direction and then I wait for a time where the market starts telling me that it's going to go one way or another. The market will point where it wants to go. It will do all these funky things where it will give you a little pattern. This little double bottom here gave you this rise. But this is what I call a counter trend rally, where the rally is against the major trend. So I will hop aboard these things like I'm hopping aboard Tesla, knowing that I'm just trying to pick off a small move before going on the big ride here. Greg says, does the color of the inside bar matter, or is the direction just based on the background or pattern? So it's the latter, Greg. You kind of answered it. So I don't really care where an inside bar closes. Sometimes it can be a fake out, right? Where you could kind of get something like this, where to me, all the inside bar tells me is that the market is coiling. So sometimes you get an inside bar like this, but this is what the real deal is. This is the misdirect. So if you're not sure, what I do is I use this trade execution plan to confirm what I'm looking at. So if I see a key reversal, inside bar in the direction of the trend I'm looking at, then basically I'm just going to put my sell stop underneath here and let the market do all the work. Just leave. Put your stop order in, and now you're not glued to the screen. You're not worried that it's bouncing all over. And if the market starts taking off, no harm, no foul. But if 3 hours later, or in the middle of the night while I'm sleeping, the market goes up and then comes down and collects me, chances are I'm going to be put into a trade, a good trade. And so this is an example of an effortless trade. Instead of watching till your eyes bleed some 15-minute random thing, is that I look at the setup, put my order in, and then so once I put my stop order in there, I can put a stop loss behind here. And so this is my risk, and that's my reward. And that's what I'm looking to do on every trade. I'm looking for some way to understand where my risk is in the trade. Once I can understand the risk, and if the risk is really small, I'll load up the boat. So you can see right here, and I made a lot of money right here. This is where Moderna put on this double bottom, double top in this downtrend. So now I'm always alert for patterns that are going to send things back in the direction of the big trend. You're going to have all kinds of misdirects and short covering rallies, but they're just that. They're just misdirects. I'm always looking to get position back in the direction of the trend. So, to do that, all you have to do is look for these times where you see the pattern, and you can see right here is an example of a great inside bar. That's perfect, where the market gives you just a fake out up here, and then now it stops. So what it did is it went higher, and then the next day it stalled, right? So all you had to do coming in the next day was put your sell stop right here and let the market do the magic. So you can see that the market probably opened a little bit higher into the next day, failed, and then put you into a great trend. And you never had a tick of heat. You never had any risk. Basically, I would have put my risk there. So that's my risk, and that's my reward. And those are the trade-offs that I'm always looking for in the market. Risk versus reward. And I'm always trying to do a trade where my risk is, or my reward is 3 times bigger than my risk. So, in the FX world, I'm always looking to risk 50 pips to make 150 pips. So I will never do an FX trade unless I can make 150 pips. I just won't do it. So it doesn't come along too often, but when it does, I'll just sit in these trades directionally forever. But most people are trading, they're risking 15 pips to make 15 pips. Now, then you have to take into account the 2 or 3 pip spread. So you have to make 18 to risk 15. And this is a 1-to-1 correlation. So this is why most people are losing, because their outcomes are not big enough. I'm always trying to make a big enough outcome to merit the risk. So if you have a 3-to-1 risk reward on your trades, you can actually lose 72% of your trades. Whereas if you have a 1-to-1, you have to make, 90+% of your trades work. And that's why most people are losing, because they're trying to find, 7 pips 10 times a day. And I'm trying to find, 150 pips over 3 days or 3 weeks. So it's a whole different mentality. I'm trying to carve out bigger pieces and trade less. And most people are trading more for much smaller outcomes. And then it just becomes a gamble, right? It's like you go to the casino, if you plunk down your chips and you work, win the first 2-3 hands and you walk away a winner, you're a winner. But I guarantee you, if you stay till 4 a.m, the casino is going to end up with all your chips in its bag. So that's how it works with the market too. So MR, I'm actually long Tesla. I'm long Tesla. I don't know if you came late, but I got long Tesla. So I'm just looking at some of these threads. Do you have any question? We are also subject to shrink revenue as inflation. So a lot of this conversation, I just try and focus on the market. Inflation, who's responsible for the inflation, all these kind of conversational things really have no room in trading. I'm just trying to make money based on risk and reward outcomes. So Tim says, what is the name of the websites that have the risk calculators? So I'll give you 2. This is a position size calculator for stocks. I'll put this in the chat box. And so you can fool around, put your account size here, put your dollar risk on a trade, your percentage risk. I typically recommend that you put a 0.5% risk on a trade. Then you say your entry price for Tesla is $715. Well, actually for a small account size, and your stop price is, $690 or whatever. And Tesla's too big. So, let's say Moderna, you want to get short. You can use for long or short. So your account size is, $7,000. You're looking at Moderna at 160. You want to risk, your entry price is 160. Your stop price is, 175. And your percentage risk is, 1%. So you can short 4 shares. So you can just play around with this. Risks and risk and size allocation is very important. So you can see that my stop price is big. It's $15 and my percentage is low. Actually it looks the dollar amount. So this would be the dollar amount of your position. So if you lost, you'd only lose 1% of this, or $70. And that's the way. If you risk only 0.5% on each position, very difficult to get blown out if you know what you're doing. Because 10 losing trades in a row at 0.5%, you would only lose 5% of your account. So, if you have to understand how many losing trades your account can withstand. So, TGOS, so Tija, I'm going to butcher your name. So Tija asked, do you recommend a buy and hold passive portfolio management? I think I talked about that yesterday. I do not. So this is a position size calculator for FX. I'll get to that in just a moment, Tija. And it means just what it says. This helps you, size your positions. So if you're looking at the, pound New Zealand, which I'm looking at right now, you can do this in any currency, around the world. So I'm going to assume $1 US dollar account. Your account size, let's say it's $5,000. Your risk is 0.5%, express 0.5. I'm going to put the stop loss at 125 pips. In pound New Zealand, I always put my stops quite a far away to give it some room. So I am looking at shorting pound New Zealand. And this is a little bit confusing. This is 1 equals 100,000 units. So you probably need to do, 0.1 for a mini lot. You hit the calculate button. This tells you can do 0.33 mini lots to risk $25 if you get whacked out on a $125 stop. So this is how to use the risk management calculator. So Tija, yesterday I kind of showed you how passive buy and hold investing, to me, it's a bit of a canard. And I think it's going to prove more so as the months go by, because I think the stock market's going to go much lower than people think. So this is what you hear all the time. I got these analysts behind me all the time, and they justify whatever they say if you hold it for the long term. But, in the long run, we're all dead. That's what John Maynard Keynes said, so this is Disney. This was a darling of Wall Street. This was an institutional stock. You can see since 2010, this has been just on a, cruise higher. So, if you were lucky to get back here in 2010, you're fine. But you can see now that Disney has retreated all the way back to 2014. So now you've been holding this buy and hold for 8 years, 8 years. Every day you're looking at your newspaper, you're having your orange juice, you're all fat and happy with your portfolio. And now you're back to where you started, minus inflation. So no, I don't believe, and I just have a problem with giving up control to anybody. I think that I'm better than anybody that I would give my money to. So that's what I try and teach people at the Pattern Trader. I try and give them the information so you don't have to rely on anybody else. You don't have to rely on Kathy Woods giving you a bunch of bullshit or, anybody else. The market doesn't lie. The price is the news. It's kind of like the old stockbroker joke, where the client calls up his stockbroker and the stockbroker goes, well, I've got some good news and bad news for you. And the guy goes, okay, get it over with. Just give me the bad news. He goes, well, your stock plummeted. You're down 90%. You're wiped out. And so he says, well, what can possibly be the good news? And he said, well, you were down on lower volume. So, I don't care about reasons. I don't care about excuses from portfolio managers. You have to live with the consequences of other people's decisions. I prefer to lose on my own. So Tija says, some scientific studies have proved market timing is not predictable. Well, I do it all the time. I mean, I don't know what to tell you, but, I was telling our members to short gold when the whole world was going long based on price information. This was June 30th. Isolated this, bear pattern. Gold was at 1,800. Now gold's $100 lower. So while you're looking at a 9% inflation print, a record 40-year record in inflation, gold should be up, but it's down. And your advisor is giving you this, well, but inflation's going up, so Mr. Jones, just be patient. It's a bunch of horseshit. Silver, I was short. Dollar yen, I was telling people to go long at 117. It's at 140. So I pick tops and bottoms all the time. And I'm no genius. It's just that the market tells you. So this was all the way in gold quite a while ago, when gold was really, when we were in the depth of Corona, the depth of central bank, rate hikes. So right here. So this was this descending triangle that I talk about breaking now. I knew it was going to break through here, back there, because I understand how patterns work. So despite all of the misdirect in the market about, inflation and coronavirus and central bank easing, and now we got Putin and Third World War, gold topped out 3 years ago and it's $300 lower now, $400 lower than where it was $2,100 at the height of the corona. So this was back on January 10, 2021, a year and a half ago. And I was telling our members to sell gold there. Sell at 1867. I said, for the past few months, gold has been forming an ascending, broadening triangle. Last week's key reversal is pointing to gold going lower. My target objective was $1,700. I wrote this in that email at that time when gold was trading at 1,900. Why? Because my objective was right where that red line is. And guess what? It came all the way to that red line. So, is that a magic show? No, it's just the way patterns work. Here's, right in that same period, February 2021, a month later, I was still short gold there, at 1897, where I said, add to your trade at 1797, ascending, broadening. And that's what happened. So, is it luck? I don't know. To me, I pick tops and bottoms all the time. So let's see. Jerry says, what is the boiler room? So I'm glad you asked that, Jerry. The boiler room has kind of been this experimental program where, I called up my partner one day in May of last year when I was long all of these options. And where is this thing? I was long all of these stocks, the stock and options in the stock called Beyond Meat right here. So I saw that this thing kind of did a fake out, didn't break there, and I started buying call options and the stock right here when Beyond Meat was 120 bucks. And then you can see the market is trading right now. There's a pre-market right now. You can see it's actively trading. The Qs are up about 30 points from where they closed. Tesla's about unchanged, but you can see it's actively trading. And it also actively trades in the pre-market session. So I see what's going on and I look to buy things in the pre-market. If it's opening lower, I could buy it lower and then what have you. So there was one morning where I was kind of freaking out. I was so excited. I called my buddy Peter, who's our marketing director here. He's in Bangkok, and I said, Peter, this stock is up, $8 in the pre-market or something like that. I said, I had all of these things, and I was poised to make about $800,000. And I could see that in the pre-market. And so this is where it kind of gave birth to the idea of starting the boiler room, which is really a name for this webinar that I conduct Mondays through Thursdays, where I kind of take a look at these early morning opportunities before the market even opens. And, I can buy or sell stocks before the market opens. Most brokers will facilitate that. So, before the stock even opened, this was May of last year. This may not even have it on here. So right here, and this is exactly what Tesla looks like to me now. You had this kind of, it's not really a reversal, but you had this combination where You had this very small inside bar. So this is what Tesla looks like to me now. Whatever I showed you on Tesla, this is what it looks like. You have this little inside bar, and I'm surmising it's going to coil to the upside. So I saw this little coil here. There was a lot more that went into it. There was a fake out here, and I started buying the stock in the pre-market at about 120. And the stock opened at like 123. So I was able to buy stock at a price that you actually never saw in the regular market session in the pre-market. So in the boiler room, which is this early morning session, I would be telling, our members in that thing to start buying this before the market opens. And this is the kind of arbitrage that you get, in the pre-market session. So that's what the boiler room is. It's a Monday to Thursday. It's 8:45 a.m. to 9:30. So in the United States, the regular market session opens at 9:30. But I'm, watching these stocks actively trade in the pre-market session. And we start talking about what the market's likely to do, what I'm looking to do, and the whole thing. So yesterday, when I came in short yesterday, I had all these put options, and I could see that the market was going to open much lower. And so I put in all of my orders to get me out right as the market opened. So this is, the boiler room. So we kept it pretty small, and now, we're fooling around with different ideas to, open it up, and we'll let you know. Eduardo, we'll let you know. We're still kind of fooling around with what we want to do, what the pricing structure should be, the whole thing. But this is probably the most valuable thing that I do, because I send out an email every day, and it's a static email, and I can only do so much. But in the morning, I get to see how the markets are reacting, and I can adjust. So this is typically the email that we sent out every day. And so it's a static email. I show you, this was FedEx. Actually, I put the wrong chart. Yeah, I put the wrong chart. I didn't change the chart. When I do these emails after the webinar, I'm tired. So this was the wrong chart. But I put a sell short, in FedEx at 218. It never went there. But the point is, I show you what I'm looking at. I show you all the portfolios, that I'm in, and, on and on. But the boiler room is dynamic, where I can discuss what I'm looking at, why I'm looking at it. We can put on positions and things of that nature. So it's worked out really well. And it's also a community where we start, hanging out together, talk about, politics or what have you. So it's, a really cool community. And I think this is the best thing that I do, because I can actually explain what's going on while it's happening. Very difficult to just send out an email, and then tomorrow, based on, whatever's happening in the market, I make certain adjustments. So, I told you yesterday, Mike Tyson had this saying that, everybody has a plan until they get punched in the face. And so to me, everybody has a plan until the market shows you something different. So, quite honestly, and, this is why this was such a charge to me, and really kind of showed my evolution in my thinking, because this had pierced a very long-term trend line, which I thought was going to result in a big move, which ultimately happened here. And this is why I say with Tesla, this is exactly what could happen with Tesla, where I saw these giant patterns, and you had one more move left before it made the other move. And I think this is exactly what's going to happen with Tesla. We're going to have one more this way before you go that way. And so I was able to see this trap where you kind of went to a new low, and then the minute it started to come back through this neckline, I kind of felt, okay, a trap has been sprung. And when a trap has been sprung, it goes hugely, viciously the other way. And so I just loaded up on these call options. here it was. So here it was. So a lot of people just BS in this industry. I trade every day. So, whatever I'm saying to you, I'm doing in real fact. So this was my email on May 25th, right here. When I saw the setup, I said, put a buy stop at 120.5. The thing is, the market opened at like 123. So I was buying it in the pre-market around 120, and then it never looked back. So, I said for the last several months, you've heard from me that Beyond Meat would crash below the neckline. I said, well, eventually I came to pass. However, following the crash through the neckline, BYND has taken a U-turn and appears to have formed a rounding bottom bull price pattern. So this is where the markets are dynamic. I see the patterns, but then, you have to adjust to what the market's telling you. So this is, yeah, I guess I made some on this account. I was up like 36 grand on this, but that really wasn't what I was looking for. I don't know where that is. I think it was here. I had 277 calls of the May 2021 calls, and I was making 49 grand there. And then I had 5,000 shares of stock, and it went ballistic. You could see that the calls, I was making $227,000, and the stock I was making 60 grand here. And in the other account, then it went to $394,000. So I bought these call options at $1.25, and I blew out of them at about, I don't know, $19 or something. And I made $394,083, on the stock. You can see I was losing also in some Tesla calls. So you can't, so I show the wins and the losses, but the wins were a lot bigger than the losses. And I did the same thing in another account where combined, this was $600,000 in gains. So I bought these options at $1.25 or $1.50 and blew them out over 20 bucks. So that was that trade. So, who knows? Tesla might be something like that again. John says, I asked support last night about the boiler room. Please let me know once you get it going. So John, thanks for asking. We will. We're still kind of fooling around with the program. I don't know if I want to open it up. I'm kind of thinking, so just a short survey. Who of you on this webinar would be interested in, this kind of format where, you check in and hang out in a community and we look at trades and what have you. So, let me know. So Greg says me. So let me know if you guys are interested in it, because based on the interest, then we'll open it up. So Jane says 100. So I'm getting a lot of me's. So yeah. Okay. So I'm just trying to read all of these things. So Carlos says me. They're coming in so fast I can't read them all. So John says 100% yes. Jan says yes. Ron says I would. Jason, Mohammed, me. Phil says me. Phil says me, please. Andrea, Tija, Anderson, Raymond. So yeah, we'll do something, because I think this is the most, I get sometimes very frustrated because I've been saying short Moderna, short Roku, short all these things. And then we have these short covering rallies and, all these things are happening. And it's very hard for me to explain dynamically what's going on. And to me, this would be the best thing that I could offer. I think I'd like to phase out everything that I do and just do that, because I can talk about everything that we're talking about now. And then also this will be, how to get in before something actually happens. So, we're definitely going to do something. We just kind of have to figure out how to do it. Margarita, you're welcome. Eduardo. So, yeah, so we will figure something out and we'll let you know when it's ready to go. Nasser says 100% yes. So we'll definitely, let you know about that. So before I go, I'd like to, ask that, you give me a review, whatever you thought or, got out of this thing, good, bad, or indifferent. I'm not looking for you to sugarcoat anything. This is a third-party trusted website. And by the way, if you're interested in, participating in anything, that we do at the Pattern Trader, you can also go and see what other people have to say. So instead of kind of listening to me, this is a review website. I'll put this in the chat box here. And if you could, there's a little place here to write a review, and then you could also go and scroll here. So, I read these once in a while, and just brings a tear to my eye sometimes. Really, it's just phenomenal. People always say, well, if you're making all this money, why would you do this? And to me, that's a very legitimate and credible question. I mean, if I was sitting in your place, I'd be thinking that too. If you made so much money, $500,000 in the metals this week, why would you do this? And it's really because of this, because, over the last 5-6 years, we've had the Pattern Trader. I've formed a bond in a community. I do a webinar tomorrow called the Underground Trading Session, where I go into the markets and we look at everything live, and then, I take questions and answers, and and I've had people that 5 years in that group, that have been there. So to me, it's like, inheriting a second family. I never understood that was going to be the real benefit of doing this. And so, I read something recently, a book. I didn't read the book, but the thrust of the book basically said the most medically advantageous thing you could ever do is give back to others. Try and help others. It helps you karma-wise and medically and whatever. And I don't know if it's true because I'm in a lot of pain, but I do love just the karma of giving back. I messed up so much. I screwed up so much. I lost so much, on the way to kind of building kind of the knowledge that I have, that, it's just cool to be able to give it back. It's like, I just know that, this is just like a tricky area that, I've been through this a million times, where you kind of think here and you think you got it going, and there's just a ledge here, and then there's all this stuff here, and then you get here. And I just understand how markets work. And so, it's kind of a privilege to be able to give back, and, hopefully, people get something out of it. Tyrone, you're more than welcome. Ronnie, you're welcome. Paul says, this is great. You are the real deal. So thank you for that. Do you have an affiliate program? We really don't, Greg. I don't really handle much of the marketing. I don't think we do. But, send an email to the support at the Pattern Trader. Let me know what you do, and maybe there's something we can do together. So I've kind of resisted kind of doing affiliations or whatever, because there are a lot of people in this business are, fast buck artists and scam artists. So, I try and keep this, pretty high quality, but Kayuta says, thank you so much, Mark. Always been a great mentor. So that's the greatest thing that, somebody could say to me, really. Sometimes I read these reviews and I wonder who the hell they're talking about, because I don't know. It's just weird. I don't think of myself like this. So it's really cool. But anyhow, that's kind of the rush of doing this, is just being part of a greater community, because I just sit in my office and I'm doing what I'm talking to you now. I'm looking at these charts while I'm looking at, talking to you. I'm looking at them, making evaluations and calculations, what I'm going to be doing. And so, just to be able to share this is quite cool. All right, guys. So, I'll take a few questions if you have any about anything we talked about. Otherwise, I'd really appreciate, I know it's a pain in the butt to leave reviews. I know you go to Starbucks and everywhere and they ask for it, but You know, I hopefully I put some good energy into it, and, you know, would really just like, you know, knowing what you thought of it, good, bad, or indifferent. Roger, thank you. If there is one indicator to use, what is it? Price. Bradley, the only thing in, you know, that counts is price. You know, indicators are like driving, looking in the rear view mirror. Indicators are based on prior information. They're, by definition, they're called lagging indicators because they're using prior periods. Now, I'm not saying it doesn't work. I just have a way of, you know, or I just trying to look at a picture, and the picture to me is 1,000 words, and I don't need anything else. Now, maybe there would be an advantage to using other things, but I also find that there's, you know, a paralysis by analysis. Which information do you use? What time frame do you use it? So I just find, to me, it's all about risk and reward. You know, it's like we can have 1,000 conversations about Powell, about inflation, about earnings, about this and that. And to me, I just look at a little price setup, like I saw in Beyond Meat, like this. We have a little reversal here, you have a little reversal there, and I think the energy is going to go that way. And I look at the markets in terms of energy, right? The energy is coming one way or it's going another. And I'm just looking to find out where I can catch the energy. So just like that Beyond Meat, what this says to me is that this is the neckline of this Head and Shoulders. And just like Beyond Meat did this exact same thing, had this neckline at 113 bucks, and it went to $90. And then it just started percolating above the neckline, and then you had this short covering rally. And I made the most amount of money on the upside of something that I was really bearish on. So that's the irony. I'm very bearish on Tesla. But, you know, I also think that there's a possibility it could do that. So I'm just looking to hop aboard the energy. And you can see the markets create these little traps, you know, above and below certain areas. So now, you know, all of these people have tried to, and now that, you know, if you get stuck here, you tried shorting it here and it starts coming out here, now you have these huge short covering rallies. It's like pouring gasoline on the fire. So I'm just trying to, you know, catch a little fire. So, you know, earlier in this week, I told you I was short and I caught a ride down, and now I'm long and I'm trying to go the other way. Eduardo says, always leaving me amazed. Thank you for everything. Also known as the Jesse Livermore. So thanks for that. That was a renowned trader. If only I could be half as good. Phil says, fantastic 3 sessions. Appreciate your input. Everything kept simple and understandable. You know, Phil, if you would say that on the reviews, I would really appreciate it. Grace, you're welcome. I will leave a good review. Again, you don't have to leave a good review. Leave an honest review, whatever you want to say. Al says, I learned a lot from you. My friend left me in the lurch. He told me to sell all stocks because wave down is very bad. He was looking at a 1-minute chart. I'm glad I found the pattern trader. You've changed my life. So Al, that's just, that's very meaningful to me. Really, you know, makes me emotional. So thank you very much. So Greg says, a question about the inside bars. You say it has to be within the previous bar, but sometimes you see the narrow bars higher than, so sometimes the bars will sneak out, but it's still mainly within, you know, the context. So, you know, here's maybe an inside bar that maybe slipped out by a hair, but I think you get the thing. You know, here was an inside bar. Maybe it made a smaller, lower low, but it was mainly inside there, you know, so, I'm not quite sure what you mean. So I'm just, you know, this kind of snuck out the low of the previous thing, but by and large, most of this bar was within the previous bar. So I'm just looking at a place where the market kind of stops to reset, build energy, and then, you know, that energy is going to go in the direction. So you have an inside bar here, and hopefully I'm just going to get a bit of an explosion here. So that's, you know, all I'm really looking for. And this one's complicated because this is a down chart with some things, and, you know, probably not the best illustration, but, you know, I might get lucky tomorrow. Who knows? we'll see what happens. So Greg says, okay, this is great and super simple. Yeah. It says, thank you. You can tell a person that does what they love to do. You're an inspiration for many that we try to get better in this business. So yeah, look, I've been trading for decades and I just have a passion. I just find it fascinating. I find it, somebody talked about technical analysis and it doesn't work. And it may not for everybody, it does for me. But what I really find amazing. So this is kind of very fascinating to me. So this was during the pandemic where, markets got going and, went up. And then all of a sudden there was this crazy outlier from nowhere. Once in 100-year event, right at the top. And then it came right back down to this intersect. So if you look at this intersect here and this intersect there, that was going in the different direction than what the market was doing. How the hell did it come back to here? Exactly on the nose. So this, I don't know about you guys, but when I see this actually gives me chills because this is just outlier. This is unpredictable, but this is amazing how this pattern, reverse symmetrical triangle, was forming and it formed perfectly. So, this is what keeps me in the game. I just find it fascinating. And that's why I say the market is a discounting mechanism. All the way up here, the market needed to come back and resolve itself there. The markets need to go to certain places to resolve themselves. And we all look for reasons and then gerrymander the reasons backwards to retrofit how the markets work. The markets are going to go where they're going to go. The reasons for it are, not unknown. So there's a kind of a weird thing going on here where I don't think it's weird to think. There was something else here, but there's kind of like, this is the NASDAQ. And so you kind of have an uptrend that if you connect these lows, maybe it pulls back to here, 9,000. So the markets have a way of getting to intersects. And there's always 1,000 reasons why, it got there. But it's just amazing how, the destination is almost, So you have this double top, you broke above this ascending triangle, now you've broken below and you probably need to come to the lower part. And then maybe even lower than that. So it's just fascinating. So I always just, I'm a student of the market. All right, guys, I'll love and leave you there. Take care. And Vic, hopefully it would be nice to continue with you also. We'll let you know about the Boiler Room program. And we'll see you later. Thanks very much. Thanks, Dwight.